Hi, everybody. Sanjay Swamy here with Prime Venture Partners, and welcome to our 100th episode of our podcast. Really grateful to all the guests as well as all of you listeners to have made this such a big success for everyone. And in keeping with the special, episode number, we have a really amazing and special guest, someone we've known and admired and become good friends with, the one and only Nithin Kamath, the founder of Zerodha. So Nithin, welcome to our special podcast show.
Thanks. Thanks for having me on your 100th.
Hey, so Nithin, you've had an amazing journey over the past several years, right? And much of it was probably spent under the radar, but over the last few years, certainly, in the limelight. Many people say, these are all overnight sensations that take 15 years. Can you share a little bit about your early days, the making of, Zerodha, and, some of the anecdotes perhaps that, most people are not aware of?
Right. Yeah. So we started Zerodha in 2010. So that's, technically it's 12 years old. But in my head, really Zerodha started the day I started trading the markets. And, that was 97, 98. So I was just getting out of, I was in my 12th standard and I got introduced to the stock markets and I started trading actively. So there was another 12 years behind that, in my head, I think it's like a 23, 24-year-old journey right now. So I started trading.
If I may interrupt you, Nithin, even at that time, right, it was relatively new. How big was the, I would say, universe of people that were trading, the scripts that were there? What was the process of account opening, and how did that evolve along the way?
I was trading with my parents, my mom's account actually, and it was an offline account. So so online trading really started in 2001 when ICICI started off. So I was trading with so I used to stay in this like a Marwadi neighborhood. So, there were like a bunch of people, who were dabbling in stocks, and that's how I got introduced. My dad used to invest. I mean, he had invested in the Reliance IPO and all of that. So, every morning he would get up and look at Economic Times for, like the latest stock price. I mean, he would stop looking at it as soon as it's a bear market, but in a bull market, he would look at it every day. And so started markets early. I blew up, as soon as I think around 2001, I blew up. I joined a call center, worked for 3-4 years, call center mainly because I could kind of trade during the daytime as well. So trading was always by the side, and I also was very active, as soon as the world went online, I was very active. I mean, I've always had this whole kid of trying to share market knowledge of sorts. And so I used to run some really large Yahoo Messenger groups and Orkut groups. And, in a way, there was some background of interacting with customers there. In 2005, I met this gentleman who said, can you manage me money? And I quit my job and I started an advisory business, like a portfolio advisory business. And around 2005-06 is also when Nikhil, my younger brother, joined me. And he also started trading quite early because, I had already started trading and I had set a very low benchmark in terms of education expectations in my house. So he, I disappointed a lot more than him to my parents. Yeah. But yeah, he was a much better trader than I was. I mean, I think he still is. And in 2008-09, we kind of asked the question saying, if he's a better trader, why should two people sit and trade? And I thought it was about time someone solved for like the problems that very active day traders faced in India. So when we started Zerodha, it was only meant for really, very, very active traders, people who buy and sell daily, right? I mean, that was a niche audience for whom we were trying to build this. And the enabler for this also was the National Stock Exchange in 2007 launched a free trading platform because we didn't have tech background. So they gave tech for free almost. It's a very commoditized vendor product. And on that, you could kind of innovate in terms of pricing and etc. So I think we were almost the first guys to spot an arbitrage opportunity of sorts, where if tech is coming for free, is there a way to go disrupt on pricing? And yeah, so that's really what started Zerodha in 2010. I mean, there were two problems that we're trying to go after. One was, of course, reducing the trading cost for very active traders, and two was also to kind of bring in transparency to the business, because in the business of money, it's generally businesses are very opaque in the way they work. And I know as an active trader, you want everything to be clear and transparent. right? So we started in 2010 with these ideas. Nikhil continued trading, and we had a team of 4 people from the days before, and we were trying. I was doing sales, Venu was doing compliance and ops, and Anan was doing support, and that's how we ended up starting the business.
Amazing. Now, 2010 was also a significant year in that was sort of the start of Aadhaar, and which later led to a lot of the onboarding processes getting streamlined and digitized. So how were things in 2010 when you got started? And if you trace your journey from 2010 say to today, what would you say as the 2-3 distinct phases of evolution of the business and the trigger points?
Yeah. So when we started, really the USP was this, low cost, transparency, young bunch of guys, who are social media savvy, etc. I think around 2012-13, the first competitor came around the scene, and he was essentially saying exactly the same thing that we were saying. And that's when it kind of hit on us that, we need to kind of innovate in terms of product. And I think one of the biggest tipping points in my life has been finding Kailash, who's our CTO. He's as co-founder as me in this business. He doesn't like to be called because he joined us in 2013. And so around him is the whole product journey started. 2015 is when we put out our in-house products. And actually in 2014, Artik, he's an old friend of mine. He kind of joined, very passionate about market education. So we started building out Varsity, as in he single-handedly built the whole initiative. So yeah, Varsity started in 2014. We launched an in-house mobile and web app called Kite in 2015. I mean, I think with Kite, what we were trying to do was, while our core audience was very active traders who need all the bells and whistles that very active traders need, but we also by then we're kind of outgrown this, saying I want to build it only for traders. Now we were more ambitious, and we said, we need to go after a wider audience, because the very active trading community in India is a very small community. It's even today it's maybe less than 1 million. So we said, we need to kind of go build a product for everyone, and that's how Kite was built. It was very minimal, so it can kind of attract first timers. Mm-hmm. And it also had all the bells and whistles that active day traders required. So 2015 we launched this. I think the second big tipping point in our journey was in 2015 December. We went zero brokerage for equity investing. Until then, we were charging 20 rupees per trade, be it active trading or investing. But the problem was, we were getting labeled as a broker to be used only if you're speculating in the markets. If you want to invest, use a bank. If you want to speculate, use Zerodha, right? And we wanted to kind of break that image. So we said, why don't we go zero for equity investing? Because anyways, we are not making any money from equity investors. And that kind of played out really well, because, we got a lot of press because of this. And in 2016, Aadhaar happened, in the sense you could now use Aadhaar for onboarding customers. You could use it for KYC and e-sign. So I think the biggest challenge in the first 5-6 years was really onboarding a customer. When there's intent, conversion, because the account opening used to be like a 35-page document with 40 signatures. And people had to fill, sign, courier, and send it to us. Courier it to us. So
I remember opening a payment gateway account for one of our early companies, and you had to sign. I counted like 176 signatures, right? Signing sideways and upside down and what have you. So it really was one of those, the amount of paper wastage that happened along the way.
No, paper wastage is okay. We wouldn't mind spending paper, but you couldn't onboard customers. But 2016, this happened. And I think we were at 70,000 customers in 2016. And we are at 10 million customers today. So in the sense, it took us like 6 years to get to the first 70,000. And then, so the journey from the time Aadhaar onboarding happened, I think there were a bunch of things that went, we've been at right place, right time, multiple points in this journey, So I think some of the things that we did in this part that worked very well was, first, when we launched Kite, I think Kay and the tech team, they did this whole super thing of first launching the Kite Connect APIs. Mm-hmm. So it's like a suite of APIs that allows for any product to be built on top of us. So Kite, our web and mobile app, were 2 platforms, but it allowed for startups to come build on top of us. Today what banks call as banking as a service, that allows neobanks. We started broking as a service in 2016, so we started inviting startups to come build on top of us, because by then we had realized that the real problem in the country to solve is to grow the capital markets, and not really to become a big fish in a small pond, and we knew that to grow the capital markets, you have to collaborate. There's not something that you can own everything, right? And that's how, the reason for these APIs. And when these startups came to us, this was when fintech wasn't hot. I mean, broking is hot last 2, 3, 4 years. When it was not hot back then. And so these startups also needed funding. So we set up this initiative called Rain Matter. We were profitable by then. So, we took out some of our profits and started investing in the startups. And most importantly for these startups, we also gave them customers, right? Because in the business of money, I think it takes a long time to build trust, right? It took us like 2 years to get to our first 10,000 customers. A lot of our startups get their 10,000 customers in like first 10 days, in the sense, because, we are, kind of showcasing them to our customers. And this is not like a neobank where a neobank has to go find customers. Imagine, you're a neobank and the main bank somehow gives you customers, right? Exposes you to their customers. So, it was an initiative like that. And so that worked very well. We launched Coin, which is our direct mutual fund platform, in 2017. We were one of the first direct mutual fund platforms in the country. Today is probably the largest in terms of AUM. And then, the product kept getting better and it kept evolving. And then 2020 happened, and suddenly COVID and work from home. I mean, we were 2 million customers just before COVID. And I remember sending out an email in 2013 to our team saying, in March of 2020, saying, this time to get into a monk mode. And yeah, I haven't been more wrong about anything in my life, than that, because we went from 2 million.
Several of us surprised, right? I mean,
yeah,
the level of acceptance of digitization across the board, whether it was UPI payments, whether it was e-commerce, whether it was ordering. I remember talking to some of the founders of the food delivery businesses, and they all said it's going to take a year to get back to our February volumes. And instead they got to, probably 5 times their volumes, right? So,
yeah. I mean, same thing happened to us. I mean, we are at 2 million customers just before COVID. Like I said, we've grown 5x in the last 2.5 years. And yeah, so I think the good thing about the last 2 years is, I think March, April, May of 2020 was probably the most volatile Indian stock markets have been for I don't know how long, right? Not just most volatile, but most activity as well. And I think one of the best things in the journey was the fact that we were able to survive those 2-3 months, because we had tech team had worked quite a bit on just being ready for the scale. I mean, we never thought the scale will be like this, because we went like 4x in terms of our trading volumes in no time. Like some of the large brokers in the US, they were down for like hours together for multiple days, in these 2-3 months, because not able to handle volumes. Even in India, we had some large brokers being down. So, but we hardly had I think 30 minutes outage in the whole of that year. So it was one of those we were supremely confident after that volatile period that we have built a business that can scale well as well in terms of tech. So that's been the journey. I mean, it's right now I think the last 3-4 months, finally there is some cooling off of sorts. Yeah, I've generally been quite pessimistic about the world in the last 2-3 years. So, but the business has just done opposite of my pessimism. But I think the last 3-4 months is kind of, we're seeing some kind of a correction in terms of activity, trading volumes, and everything else.
Right. And that leads me to a question around the user behavior, right? Because a lot of the users you got over the last 2 years were not just new to Zerodha, they were new to stock market investing and perhaps even mutual funds. So what have you seen as the sentiment amongst those users? Because they hadn't seen any sort of ups and downs, they'd only seen up and up. Right. And now all of a sudden, these massive corrections. So what are some of your insights from the data you're seeing?
Yeah, no, I mean, see, the thing is, not just the last 1-2 years, right? From when we started the business, our business is a very high beta business of sorts, I mean, so we are so correlated to the underlying market and the indices. So, if we were to map a new account openings and compare it to the Nifty Mid Cap Index, for example, we would be almost like a mirror image. And so, except for that, COVID 2 months, where it went down, because except for that, otherwise it's just been a one-on-one kind of, like a mirror image of sorts. So, and the behavior remains the same, even with the new folks, I mean, as soon as there are drawdowns, people don't want to log in and check their portfolios. Like my dad would stop looking at his economic times as soon as, his stocks went below a certain, notional price of sorts, and so the behavior is the same, even on the apps, etc. And even the new account opening, I think I think over the last 1-2 years, also what helped grow the markets was the IPO markets. I don't know why. I mean, yesterday I was having this conversation with someone. IPOs are probably, like in India, there's this whole misconception that IPO is safe for first timers, right? IPO really isn't safe for first timers. No, I mean, because, you are investing in a company which has no track record, right? As in, I mean, but it's somehow, every IPO tends to get in a lot of first time investors, right. And now if you want to be investing in a safe stock, I mean, I think you need to go look at something which has got track record and then invest into it versus, an IPO where, insiders are selling and all of that, right? I mean, the dice is kind of loaded against the investor of sorts. So, but IPOs did help, get in a lot of first-time investors. A lot of these IPO investors, because the allotments were not happening, they ended up investing into other stocks as well, because in some of the popular IPOs, which got a lot of applications, the allotment was hardly anything at all. Now, the problem, I think, in the last 2 years, all the customers who come in is they've come in with a lot of wrong expectations. They've all come in thinking, it's stock market is easy money, and they probably are soon going to realize that it's probably the toughest place in the world to make easy money. And so as a business, we've been constantly trying to temper down expectations. I mean, every single communication that we've had as a business with a customer, you always try to talk to them about the risks investing and trading in the market. The positive bit about the customers who come in over the last 2 years is most of them are less than 35 years of age. So which means they are really trading and investing with smaller amounts of money, right? This isn't like the bull markets of the late 2000s or the bull market of the late 90s, because in a lot of these bull markets, because the 90s, late 90s and the financial crisis one, I was actively part of it. And, I could see at that time, the money that was coming in was a much older money. These were like, people putting their hard-earned savings of many years at stake. But what has happened in the last 2 years is these are young guys and who are just putting between 2 to 5 months of their, salaries of sorts, So, and the best way to learn in life is to make mistakes, So, and if you can somehow get away making small mistakes, that's really the best way to learn, So, and so I think the optimistic side of what has happened in the last 2 years is the fact that, all these people, most people who come in are actually trading and investing with small amounts of money. So while some of them might get disappointed, many of them might end up learning, that some of these very important money lessons of sorts in life, but there is a lot of people who come in for wrong expectations. A lot of people have been driven to the markets because of social media. And social media has just been just all over the place in terms of setting wrong expectations.
So a lot of questions actually kept coming up as you were talking about the journey and in the recent months, but probably go a little chronologically back from where we are. One of the big recent phenomena over at least the last 18 months has been, crypto. And certainly at least before March 31st was a very different world. Did you see a lot of money being diverted away from, stock market investing and stuff to crypto in your audience? And generally, maybe we just back up, with your views on crypto itself and how they're being handled here in India.
Yeah, no, I mean, I personally, don't understand crypto, and I've stayed away from crypto because, as a regulated entity, being the largest broker in this country, I didn't want to have anything to do with an asset class that is non-regulated. So I've let go of opportunities to invest in a lot of these crypto exchanges and etc. And I didn't want to have, any conflict of interest of sorts. So has money moved away in the last 2-3 years in crypto? Not much, I think. I don't know. I mean, even if you look at estimates of what some of these crypto exchanges say is their AUM, it's just like $3-4 billion. In the grand scheme of things, of the equity markets, that's nothing. So, and in terms of users, though, I think crypto markets has captured a lot more audience, right? As a lot more of the 20 to 30-year-olds have exposure to crypto versus equity, I'm guessing. So I mean, the younger they are, I think the higher the percent of the exposure to equity, to crypto. So I mean, there was a point, in all of this, a lot of time, I keep talking about this to our team saying, there is no status quo, everyone's going to get disrupted. And, it's just we have to just look out for who's the one who can potentially disrupt us, right? And usually this disruption happens from places, that are not so obvious, right? As in, it's not just your direct competition, right? And for me, I mean, there's always been in the back of my mind that if there is another asset class that is in a bull market and which kind of gets to work in unregulated territory, so essentially they can say anything they want, they can sell anything they want. do whatever they want, so it's almost like a regulatory arbitrage that could potentially have turned this asset class, or all these crypto platforms, into potential competition, and maybe even disrupt the regulated equity market crowd. I mean, yeah, that risk was always there, but I think some of these things, actions that the government has taken around taxation, etc., I think it's kind of it's evened out that regulatory arbitrage of sorts. So while they still don't have their own regulator, but I think the kind of restrictions that are put in place right now is kind of puts it on even keel. Right. So unless crypto really outperforms equity, I don't really see how people will get into crypto, especially after the kind of almost some of these altcoins have gotten massacred of sorts, right? And I don't really see how that can really take off of sorts. I mean, it can do well, but I don't think it can really disrupt equity investing of sorts.
Cool. So let's come back to the journey of the entrepreneur at Zerodha. And, now obviously you've sort of multiple phases along the ways, and obviously I run a venture capital fund here, and, just curious whether you seriously considered, because venture capital, or you just didn't need to, or you just felt it was, aligned with the principles with how you were looking to build the company. And so would love to hear, your take on, your journey and thoughts as well there, right? And also there's the second part, which is now you are, with your own VC fund, which is Rain Matter. Yeah, if it wasn't good for you, why is it good for them? Sorry, that's the big question, but I didn't want to.
Yeah, so no, I mean, back in 2010, if it was really, I was very raw as a person, I had no pedigree background. If we had if we had got like proper professional venture capitalists on, like who said, what, Nithin, I'll give you money, I probably had taken it. Right? And once you have started the journey, you would have Zerodha would probably be very different to what it is today, right? I mean, you would have probably taken a different kind of a route. I think one of the things,
Can you elaborate on that? What do you think might have been different?
So yeah, so the thing is, my understanding of this business, even before Zerodha was, right, was that people don't look at an advertisement and decide to invest in the markets. I mean, a Shah Rukh Khan dancing around the tree will get you to buy a mobile phone maybe, but it won't get someone to, I mean, someone might even open an account, but it won't get someone to invest in the markets because of that, right? Unless, of course, the advertisement was selling greed in some form, right? If you could say, like, how some of these crypto exchanges were saying, you can make guaranteed money, then of course, that ads will get a lot of interest, right? But you knew that, working in a regulated space, you can't really run ads that can push greed of sorts. So that was, in my head, even before Zerodha, saying that the way to grow this business is really, organic and word of mouth, right? And we need to enable, put as many enablers in place as possible to get our customers to be talking about us, and where we are not forced to go and advertise, right? So, and I mean, philosophically, I think, especially after K joining, I think like we've been one of those, let's do whatever best we can, and whatever growth has to happen will happen, right? So philosophically also, that was not very in sync with how VCs think about it, which is, to put targets and chase it down, right? I mean, it works for some people, but personally for me, I don't think it would have worked, right? Because I like the freedom, I appreciate, this whole freedom of more than, any amount of money, right? So the first year, before I knew all of this, I would have probably taken money, right? But between 2000, I think 2010, I mean, I was not really connected to the startup ecosystem. I think 2012 and 13 is when, I started, interacting, I went to a bunch of events and heard all of this CAC and PMF and stuff like that. I mean, I never knew these words when I started Zerodha. So it was really, the first time I was even listening to all of these words of sorts, I mean, all of this lingo of sorts. But in 2012, 13, we were already profitable.
I still don't know the difference between Sam and Som right now.
Yeah. So 2012, 13, we were profitable. And then we started this whole tech journey. And that's when a lot of interest also inbound started coming in. And around 2013, 14 is when it started.
They'll give you money when you don't want it or you don't need it, right?
I also kind of realized that in this business, you're like this girl in college who doesn't date anyone, right? As in everyone wants to date you. So, so the more you say no, the more interest you create, so, but 2014, this is like a conversation we were having internally back then as well, saying that, if you take this route of raising capital, see, the thing is, to build a business, you need to have some kind of a moat or an edge, right? And I mean, of course, you can get into the fight of deepest pocket wins, right? It's a fight that many people have won and built great businesses around the world. But there is also a fight, a way to fight this, which is to say that can you do stuff that is tough for the one for a deep pockets to do, right? And you can't. I don't think you can really do it in every industry, but certain types of industries where the product is very complex, where you can put some, because see, in our business you can spend as much money. Gaining credibility takes time, right? You can't just spend money to gain credibility, right? Or you can't just spend money to build a very I think building a trading platform is more complex than building it's a really complex product, so because you're talking to multiple exchanges, every order has to be executed in microseconds. You cannot be down for like even a minute. And I mean, you're dependent on exchanges, depositories, clearing corporation, while the customer is just looking at an app which looks very simple, but at the back end there is so much happening. Exactly. And all the regulations in the world that you need to be compliant with, right? So we knew that no one can just raise a lot of money and just catch up with us in terms of distance. And we also knew that as a business, we can do things which will be very hard for a funded business to do, like just
material moats in all aspects of the business, that you didn't feel capital would necessarily be a weapon somebody could use against you.
Correct. Yeah, absolutely. And I thought capital also brings disadvantages to our competition. Like, for example, right, as in we haven't done a single push notification till date asking a customer to buy or sell a stock, right? Not everyone appreciates it, but there is this large community within the audience which appreciates it, right? Which is our largest education initiative, and maybe the third or fourth largest in the world. We have millions of people who have registered in Varsity to kind of read the content and get some emailers, etc., or post comments, etc. We haven't till date sent one email to all of these guys saying, do you want to open a Zerodha account, right? Or like giving away stupid deals to induce customer to open account. We have always said that trading the markets is a serious business. It's not like getting on an app and ordering samosas, right? As in, this is serious, and you need to build the seriousness right from when the account is started. I mean, you don't want to give away all these goodies and people come in thinking this is some casual stuff happening. This isn't. People can lose the shirts and pants to the market, right? As in, some of these things I think would have been very tough to follow through if we were kind of funded. As in today, one of the biggest things that we are working on is this platform called Nudge, which is really like a layer, user experience layer on top of our trading app. So what we have realized is, to do well in the markets, to do well with money, you need to avoid a few mistakes, right? If you avoid a few mistakes, your chances of doing well improves significantly. Like, don't concentrate into one or two stocks or a sector. Don't go against the trend. Don't buy penny stocks. Don't over leverage, right? Stuff like this. So what we're doing right now is essentially introducing all of these mistakes. I mean, these things as mistakes on the trading app. So if a customer is making a mistake, we proactively nudge the customer to say, you know what, you're doing a mistake, don't do it. So essentially each nudge really reduces the business for us, right? And it would have been very tough to justify something like this if there were investors or
right thing to do for the customer.
Yeah, if you have this, I mean, the thing is, usually the problem I think with investors also is that if you're chasing shorter term targets and goals, all of these things seem okay to do, but if it's just your horizons, right? I mean, if you say, we keep talking about it in the business, saying that I rather make 100 rupees for customer from 10 years, next 10 years, versus making 10,000 rupees in the next 1 month and losing the customer.
Yeah.
Right. I mean, so it's just a choice that you're making, So while, us nudging a customer not to trade might seem like it's not bad, it's not a good thing for the business. Yes, it's not probably in the next 1 month. Right? But if you look at it like over the next 10 years, I think it kind of, I think it's a smart thing to do, which is doing what is right for the customer. It's almost like
you're absolutely right. It's all about the time horizon also, and how you align the incentives. I mean, having said that, and certainly we love founders who think really long term and think about just building big companies, right? I mean, people ask me, how do you think about this or that in terms of IRR and stuff like that. I actually don't. Right. I hope my LPs are not listening here, but generally all we say is, look, we just want to build great companies, and these have to be great lasting companies if we can, and good things will happen. And the return will be perhaps not optimized to the second decimal place, but it'll be above a certain threshold that, if you do good things will happen. I always even tell founders, right? Financial success is an outcome. It's never a goal, right? And invariably in life, whenever I think all of us from time to time have chased financial success as a goal, it's never happened, right? But it only happens when.
Oh, I know. I mean, as a trader, when you're trading the markets, I think the worst thing you can do as a trader is to put a money goal, right? As an active trader, because then you end up taking too many risks, and you're just optimizing for that money goal. And
and on the flip side, perhaps getting out too early as well, just because you hit that goal, right?
Absolutely. As in, I sometimes think about it, like if we were a funded business and say we were listed on the exchange, maybe I would have sold my own stock in April 2020, saying, what? So like, what, this is, there's probably like a peak and stuff, so yeah, like I'm saying, it is when you think too short term, I think you end up, I have a feeling, you end up making a lot more mistakes of sorts.
So let's talk a little bit about Rain Matter, right? So the other side of the coin, where you all have a fund, and even if when you come in, you can sort of drive the thought process and mindset with the founders you choose to partner with, right? Over a period of time, those companies will raise from other investors, and we've done stuff together as well, right? So how are you able to sort of influence and balance, and choose these companies so that they have the longer term mindset, right? And is it just the nature of the business you're in and the founders you cherry pick?
No, I mean, see, the thing is, firstly, every founder that we've interacted with through Rain Matter will, probably vouch for this, that we have never ever done an investment with an ROI in mind, right? In terms of, return on the investment. For me, in my head, it's almost like a CSR thing, so like, the investment is done writing. See, we all these investments were done with the objective of expanding the capital market ecosystem. It's more like an impact fund versus, where we are trying to chase returns on this. So we think these ideas should exist. And when we find a startup, kind of executing on those ideas, and we think it should exist and need some support and help, is when we get in. I mean, it doesn't mean that, we don't have a for money chasing kind of a fund. And Nikhil, my younger brother, manages our portfolio. So, we have large investments in public market stocks, and, so which is where, we chase returns, so where we are actively, buying, selling, and, there is no emotional connect, nothing, I mean, we're just, acting like traders, like sorts. Right. But what we're doing with Rain Matter is just for impact, it's a very small percentage of our, yeah, I mean, it's just, I mean, if we like the idea and we think it is something that will help the capital markets in the country, we do. And I think in due course over, this all started as capital markets, but it then got extended. One of those personal things that I've been very passionate about is health and fitness and etc. And I believe that Indians need access to healthier food and, and at least an option to, make a healthier choice, right? As in, because, a lot of times today, we don't even have that option. I mean, I have a sweet tooth, but I don't want to have 20 grams of sugar in my chocolate, I mean, in a single piece of chocolate. I want a chocolate which is more chocolate and, maybe very little sugar. So, I mean, so those choices, you need those options to be available. As in, if I want to work out at home, I should have a way to work out at home and not have to go to the gym, etc. So, I mean, we started supporting some of these kind of causes that I was passionate about. And then, this whole, like 2018, 19 is when, financially started doing really well. And we realized that there is no use of money for the business. As in, I mean, we're not spending on anything, I mean, our team, we are at 1,000 people in 2020, we are 1,000 people today, but the business has grown 5x. And so, the margins were going up and all of that. And we said, it's kind of, money shouldn't be lying idle and doing nothing. And that's when we said, we need to put this at good use. And me and Kailash, we've been, I mean, Kailash more than me, but, is this big proponent of, like climate change issues, etc. One of those things that has bugged me right from, from the time Aadhaar started was, is that, the kind of efficiency that Aadhaar brought into the system, helped businesses, but it also created a lot of job losses, right? Today, for example, to open one account, if I needed, to open 100 accounts, if we needed 30 people in 2015, today we need one person, right? So that means this.
You're the second person. The other one is also on this podcast right now, who's actually said, I've actually written an internal blog published about the job loss, but it's the right thing to do. I'm not saying it's not the right thing to do, but it has had a short-term effect. Yeah.
Yeah, see, the thing is, eventually you don't need inefficient jobs, right? You need to create more efficient jobs out there.
Yeah, correct. Availability of the right services, but the middlemen that were sort of, I would say, are arguably thriving because of the inefficiencies, are not going to have to do new things. Yeah.
Yeah. So these two were causes that, me and Kailash and our team, Nikhil, all of us were very passionate about around climate change and around livelihood creation. So that's where, we ended up, Samir, heads this initiative. It's called Rain Matter Climate. So it's a foundation through which we are investing in for-profit and for non-profits. We're kind of working in all of these causes.
Mm-hmm.
And the way we have structured it is that any profits from the for-profit investment goes back to the foundation, and we've said that we will give back most of, actually invest in the future. Every time I say give back, the team says I shouldn't be saying give back, but say invest for future. So we have allocated most of the wealth generated from the business to the foundation. So we haven't yet found large enough causes to deploy large amounts of money. And I think we've done 100 crores. We're just leading a large round into Akshay Kalpa right now. And so we'll probably, we're in that whole experimenting phase, interacting with startups and foundations and NGOs and etc. And we'll probably start cutting larger checks as we go by, with Rain Matter Climate.
Awesome. Great. Two last questions. One is, Nithin of today, if you had met the Nithin of 2006, 2010, what would your top 3 pieces of advice be for that person?
Yeah, I usually think about this quite a bit, and it's just, I've been in right place, right time so many times. And, I don't know what, if I had changed in my life, would have made me not be at the right place, right time, so, and so I'm like, if I go back in time, I almost feel like I'll not say anything, I'll just lead my life the way it was. 2006, 7 and all, it was very tough times for me. But if I had done things to optimize for that, I would probably not be there where I am today, and so it kind of must be a cliched kind of an answer, but it is actually true, it's just...
It's a cliched question, but yeah, I think the answer is very interesting, which is, I think you're extremely humble enough to say that, look, a lot of this didn't happen by plan, and I couldn't have done this consciously, right? One thing led to the next, and suddenly, it got into this virtuous cycle, and very, very, very well said. But having said that, now that we have, and especially with the current climate, and we're seeing a lot of strange developments, especially for anyone who graduated after 2016. This is probably the first time they're seeing things. Counsel to entrepreneurs, especially those who are either midway through their journeys and suddenly seeing headwinds, and new people who are starting out now.
Right. No, see, the thing is, like, if I look back at Zerodha and kind of attribute some reasons for the success, I think, like they say, right, you need to sharpen the axe before you go chopping wood, so it really, I think those 12 years that was spent in the industry before starting Zerodha is really, I think, what has helped even today, because this is not something, that it's not something you decided in a coffee shop and started in a month, this was, this is something that I lived for 10, 12 years. So I personally think that because of that, the odds of succeeding increase quite a bit. I like my poker, I like trading, etc. So I'm just always looking at risk to rewards on almost everything, and I think the way to increase the odds for almost anyone who's starting up, or even starting a career, is to pick 1, 2, 3 things, attempt, find something that you really like to do, and then spend some time around it before you think about building a business. Today's world, everyone's in a hurry to get there fast, right? But I don't think, like, I have this, I keep asking this question, every time we meet the Rain Matter Climate team: is there a way to grow a tree fast? Is there a way to grow a forest fast? And, is there a way to growth hack into this, to do it faster? There isn't. You can, of course, like the way you can put steroids into people, you can put some, fertilizers and get a tree to grow fast, but it's not going to be a forest. You can have a single tree standing, which is grown forest and a fast. So I think business is building a business is quite complex, and and there is no easy or a fast way to. Of course, some people have gotten there much faster than others, but I don't think you can really start off thinking that you will get there fast. So So I think you need to sharpen the axe, do whatever it is before you start the journey. And once that, and second, I think, the learning in my life has been that the odds of succeeding is higher when, more people want, as many people want good things to happen to you. In a way, it's actually, again, a very cliched thing to say is, do good will happen to you. But in a world where we live in, where, customers are connected to each other, if your customer wants you to do well, the chance of you doing well actually increases, right? And so that, what is the relationship you have with your customer? As in, I think if in Zerodha, for example, we have 10 million customers, not a single advertisement till date, and everyone coming from word of mouth. And that's happened because your customer has wanted you to do well. I mean, he's done spoken about you to, his friends, family, whatever, right? And that is a really, you can build a large business. I mean, we are a living proof that it can be built, right? As in, you can actually build a large business without having to actually go, kind of do all the marketing and advertising that, that you're supposed to do. As in, if you can do good to your customer, I think, and given right place, right time, I think, so yeah, so keeping customer in the center all the time and never doing anything that's against the customers, I think is a good idea as well. I mean, these two things probably are what has helped me and Zerodha as a business, so.
Awesome. Great. Hey, Nithin, really appreciate these pearls of wisdom. I think, it's really, really commendable. I think I've had the pleasure of knowing you since probably 8-10 years. I think we met at one of those NASSCOM events a long time ago. And then it was awesome to see how the company has evolved and scaled up. And really, you've been a role model to all of us in the ecosystem, the fintech community, the entrepreneur community, as well as the ecosystem at large. Thank you so much for being on the show. And look forward to the next 10 years of Zerodha, where it should be hopefully one of the larger $100 billion companies or a $1 trillion company out of India.
Thanks, Sanjay. And hopefully you have your 900 more podcasts and you get 1,000 soon.
Podcasts are means to the end, but yes, absolutely. Thank you.
Cheers. Bye.
Dear listeners, thank you for listening to this episode of the podcast. Subscribe now on your favorite podcast app for free, and you'll be the first one to know when new episodes are available. Just search for Prime Venture Partners Podcast in Apple Podcast, Spotify, Castbox, or however you get your podcasts. Then hit subscribe. And if you have enjoyed the show, we would be really grateful if you leave us a review on Apple Podcast. To read the full transcript, find the link in the show notes.